There's a billion-dollar secret hiding out there in plain sight. It's this whole new world where the old rules, well, they just don't apply. And today, we're going to pull back the curtain on it.
So let's just start with a kind of a crazy question. What if trading on secret, non-public information wasn't a crime? What if actually that was the entire point? Because, in this brand new corner of the financial world, that's exactly what's happening. For as long as we can remember, we've all known the deal with Wall Street, right? It's heavily regulated. Insider trading, that gets you prison time. And you have government bodies like the SEC and the CFTC watching everything. But now there's this new frontier, prediction markets. And this place, it's a total regulatory vacuum. It's the Wild West. And here, insider information isn't a crime, it's how you make a profit. Okay, so how is any of this even possible? Let's dive into why this new market is playing by a completely different rulebook, or no rulebook at all. Well, the whole thing really hinges on this one massive legal loophole. See, the SEC, they regulate securities, stocks, bonds, that kind of thing. And the CFTC watches over commodities like oil and gold. But these new platforms, they trade contracts on events. Things like, will this person win an election? Legally speaking, that's not a security or a commodity. So that main rule that the feds use to nail insider traders, it just doesn't apply here. The rule book is basically blank. And look, this isn't just some abstract theory. We have actually seen this play out in real time with some absolutely unbelievable trades. So let's open up the case files. First up, we've got a case that involves one of the most secretive announcements on the entire planet, the Nobel Peace Prize. Just look at this. On the prediction market Polymarket, 12 hours before the official announcement, the odds of Maria Corina Machado winning were tiny, like 3.6%. But then, in the final hour before the news broke, they just exploded to over 70%. Come on, someone clearly knew the result before anybody else did. And the payoff? Oh, it was huge. One anonymous trader, we only know them as 6741, made a cool $50,000 on what was, for them anyway, a totally sure thing. And while officials in Norway were scrambling to investigate a leak, 6741 was already gone with the cash. All right, let's move on to the next file. This one shows how this isn't just about global politics, it applies to pop culture too. So get this. Long before the Taylor Swift and Travis Kelce engagement was officially announced, a user named romanticpaul starts scooping up Yes shares while they were still super cheap. Then their buying speeds up right before the official Instagram post went live, and bam, the shares hit $1. They netted an easy profit. The timing was just way too perfect to be a lucky guess. Okay, but this last case, this one is maybe the most mind-blowing of all. It suggests that someone had access to data from one of the biggest companies on Earth. I mean, just look at this record. A trader going by Alpha Raccoon correctly predicted 22 out of 23 of Google's really niche year-end search trends. That is not luck. That's near-perfect knowledge. Really, the only way that makes sense is if they had access to internal Google search data, and they used that info to turn it into over $1 million in profit. So yeah, these individual trades are pretty wild, but they're really just the tip of the iceberg. They're all pointing to a much, much bigger business model hiding just beneath the surface. And that leads us to the really crucial question, right? If these platforms know this is happening, why in the world would they let it? Why does it almost seem like they want their markets to be moved by insiders? It's because the betting, that isn't the real product. The data is the product. Here's the playbook. An insider with real knowledge makes a trade. The market price instantly snaps to reflect the true outcome. The platform then captures that incredibly accurate real-time signal. That data is then packaged up and sold for millions of dollars to hedge funds, to institutions, even to governments, anyone who will pay top dollar to know the future, even if it's just a few minutes early. And if you have any doubt about the scale of this whole operation, look no further. The parent company of the New York Stock Exchange recently invested in Polymarket, valuing it at a staggering $9 billion. They're not just betting on some little trading site. They are investing in a global data pipeline for the truth. So, okay, the really big money is in selling the data. But that doesn't mean there aren't other ways for people to play this game. Even if you don't have a buddy on the Nobel Committee, some really sophisticated traders have figured out how to profit from the system itself. And the key concept here is something called arbitrage, Now, in simple terms, it's just finding and exploiting tiny price differences to lock in a completely risk-free profit. It's all about the math, not about having some secret knowledge. Let's just walk through a perfect example here. A yes share and a no share cover every possible outcome, right? So their prices should always add up to exactly $1. But sometimes, for a split second, they don't. So here, you can buy a yes share for 62 cents and a no share for 34 cents. Your total cost is 96 cents. But here's the thing. No matter what happens, one of those shares has to be worth a full dollar when it's all over. So you've just locked in a guaranteed 4 cents of pure risk-free profit. Now, do that thousands of times a day, and it adds up really, really fast. And there are other strategies too. You can do what's called cross-platform arbitrage, where you're exploiting price differences for the very same event on two different websites. Or you can do what a lot of traders do. You can track the whales. Because this all happens on the blockchain, every single trade is public. So when you see a massive anonymous bet come into a small market, you can just piggyback on it, assuming that whale knows something that you don't. But here's the thing about a gold rush, right? Eventually, the sheriffs show up. This Wild West era, it is not going to last forever. The strategy these platforms are using is straight out of the Silicon Valley playbook that built giants like Uber and Airbnb. Just moves so fast that the regulators can't possibly keep up. You establish your market before they can even figure out how to write the rules. But as billions in institutional money start pouring into this space, I'm talking about that huge investment from the NYSE's parent company, the demand for rules and for stability is only going to grow. Regulation isn't a matter of if anymore, it's a matter of when. And that means the window for this easy arbitrage and consequence-free insider trading, well, it's closing. Which really just leaves us with one last thought. These markets have proven, beyond a doubt, that you can put a real-time price tag on the future. So the question is no longer can it be done, but who gets to control it and who gets to buy it first?